Trades right here, Neeti. Now, let me welcome on board Amit Shetty, the CEO at Embassy REIT, joining in on the show right now. Amit, hi, morning. Great to have you, Neeti. Now, you've recently acquired this 852 crore rupee asset in Bangalore, right? What kind of rents are you expecting from this acquisition? Any more acquisitions that you have in the pipeline?
We are very delighted to announce the acquisition of 100,000 square feet asset in Embassy Golf Links, which is one of India's most premium micro markets, for an acquisition price of 852 crores. The NOI will be about 67 crores annualized, and the in-place rent will be 192 rupees effective 1st April 2026.
Sure. But Bangalore market is doing very well. What about Pune though? Have you seen any incremental demand from this region? And what then is your outlook for the Pune market?
Overall, Pune market has been seeing a lot of activity. In fact, Pune happens to be the number two market for GCCs in India. And we believe that, Pune market will continue to see this momentum given the volumes that is being driven through the GCC companies. Having said that, we own three assets in Pune in the Hinjewadi side, which has been a little bit of slow, but there are three very large infrastructure projects that are being accomplished in the Hinjewadi micro market. One is the opening of the Navi Mumbai airport. The second is the operationalization of the metro. And the third is the link road between the expressway into into the Hinjewadi market. And with this, we will see increased traction in leasing in Hinjewadi as well.
Right. And what's your view on the vacancy trends and rental growth expectations across micro markets over the next 1 to 2 years?
In India, we're currently seeing one of the most robust uptick in real estate activity. The last 9 months, we've seen about 60 million square feet of leasing absorption. And we believe that it will beat the previous record of 72 million square feet. And we believe that, this year will end 80 million square feet of leasing absorptions. Having said that, there is a decline in the vacancy. There's about 20% vacancy across India. And we believe that the vacancy in micro markets is anywhere between 5 to 10%. With this, the rental rates are firming up. Across the country, the rental rates have been firming up by about anywhere between 5 to 12%. And again, in key micro market, this is, upwards of that number.
Right. And what's the gross leasing guidance for both FY26 and 27?
So it's been a stellar year for us. While I would like to comment only FY26 and not make any forward-looking statement for FY27, for the first half of FY26, we've leased about 3.5 million square feet. We've taken our occupancy to 93% by value. And we believe that, given the strong momentum in the leasing activities the country, we are very, very sure that, we will hit the 90 to 91% leasing guidance that we've given to the market.
Right. And going forward, which sector you think will drive growth, GCC or IT sector?
Look, both sectors, the IT sector has been a little bit muted for the past couple of years. GCC sector has been driving growth in the Indian real estate market. Having said that, there's a lot of hiring that's happening in the IT sector as well. IT sector, now multiple companies have issued RFPs. There's one large RFP, which I'm sure that the market is aware, which is about 3.5 million square feet, single tenant RFP. Having said that, GCC continues to be driving the real estate market. Just to give you some statistics, we believe that currently we have about 1,900 GCCs, and that's expected to grow to about 2,400 GCCs by 2030. We currently are employing about 1.9 million workforce, and that's expected to grow about 2.5 million workforce. There's about 6,000 global roles performed in these GCCs, and that's expected to grow to about 30,000 global roles being performed in India. And India continues to be, the talent fertile hunt ground for all these companies. It's got the largest pool of data science talent, as well as the second largest, artificial intelligence talent. So GCC is driving demand in the real estate sector in India.
Right. And what about hospitality? How is that shaping up in your portfolio?
Currently, we run four operational hotels across Bangalore. We have about 1,100 keys, and we're now developing two more hotels in Outer Ring Road. And then we will add about 580 room keys, taking our hotel portfolio to about 1,600 rooms. Having said that, last quarter we grew our ADR by 16% and our NOI by about 12%.
Right. And are you on track to achieve double-digit growth for FY26? And if yes, what are the growth levers?
So we've guided the market for a 10% growth in the distribution and a 13% growth on the NOI. Having said that, this is largely driven by the fact that, we've been able to uptick our occupancy. Like I said, we've grown our occupancy to 93% by value. And also in the 3.5 million square feet that we have leased, which about 1.5 million square feet is new lease. We've achieved releasing spreads of 31%, and we've renewed about 0.8 million square feet at leasing spreads of 10%. So these have been the biggest drivers. Having said this, the hotels also grown. And like I said, our ADRs have grown by 16%, and this has also contributed positively to our NOI growth.
Right. Okay. Great to have you today on the show. Thank you so much for your time. Okay, that's the word coming in from